Inventory is up 20%, but yet prices still continue to rise. How can that be? Is it a seller's market? Is it a buyer's market? There's a lot of confusion in the market. And if you're watching this video today, we're going to dive into that. We're going to dive into the data, help you get a grasp on what's going on in the Columbus, Ohio real estate market. I'm Ryan Dieter with Key Realty, and if you've been following this, you know we dive into the data, and we're looking at the previous month's data as we try to predict what's going to happen down the road. So we have the July numbers out that the Columbus, Ohio board puts out for us, and we're going to dive into that here in a second. Thanks for tuning in. Before we get to it, though, if you haven't liked and subscribed this page, please do. It helps me out, helps me understand who's watching these videos and if they're useful for you and if I should continue to make more of these videos. So thank you, and let's dive into it. All right, we got the Columbus Ohio board data they put out for us pulled up here. And again, this is for the whole area of Columbus, the Columbus Board of Realtors track. So, and you have access to this yourself. If you'd like to look at this data anytime, go to their website, you can find it. I want to dive into the numbers here real quick. As you see, as we talked about in the opener, numbers, the average price, median price, and average price per square foot as a whole is on the rise very modestly as we've been tracking this year. It's kind of the theme we've had this whole year. If you've been following these videos or if you're new to these videos, it's kind of the theme we've been following is that we're seeing modest growth still in Columbus. A lot of areas across the country are not experiencing that. And so Columbus here, we're very fortunate to still have modest growth. If you are a homeowner, of course, that is positive news. Here's the year to date. We're seeing, just under, around that 3%, 3.5% average price per square. Median sales are down. Average price per square foot is, a little under that as well, but average price is up. So we're seeing, around that three. Sorry, I was looking at that in contrast, but yeah, the average price, median price, and average price per square foot. I always look at these holistically because it's good to see those numbers, not just focusing on one, but holistically is the best way to look at it because it shows us a picture of our what's going on. Are the average home size homes selling for just as much, or is larger homes selling for more, or vice versa? Or smaller homes typically we see, which is interesting that we're not seeing that throughout the year. We see smaller homes, of more modest homes, sell for higher price per square foot, but we're seeing the average actually be higher and the median be a little bit lower. So anyways, just a little thing that I don't get too caught up in that, just kind of holistically, where's the market going? So it shows that we are still seeing a rise. And we saw this month, this is actually why, average price per square foot is actually under the average price, is because this month we actually saw that, just be a lot lower than it has been in the past on that average price per square foot growth appreciation there. In fact, let's look at last month or last year, we saw it more. And that was, again, the higher of the three. This month, we're seeing that the lower of the three. Which is interesting. Just a little interesting data that, the smaller homes maybe, this month, for whatever reason, did not sell for more than they did, compared to last year. Again, don't get too hanged up on that, but just kind of that holistically look of where the market's going is modest, slow growth. Which, is not a bad thing. I think it's a lot of it. This is what I've been telling people is the correction that we saw during COVID years, where we saw extreme growth, double digit, almost 15+% appreciation, which is not a healthy market in a sense of a holistic market of people trying to enter the market and get into home ownership is just not healthy for that sake. So with that said, and for people looking to move up or down or whatever that looks like, it's just not it's kind of created the problem we see is that, because growth happens so fast that people feel like they're almost stuck in their spot, stuck in their house, whether it's, downsizing, who wants to downsize to a house that costs just as much? They don't want to, spend just as much on a house that, they purchased their house for. And especially if they have to take a loan on it, they're going to be spending just as much money to live in a smaller house. Doesn't make a whole lot of sense. And vice versa, to have to buy a new house to buy a bigger house means that you're, maybe 3-4 times more monthly payment versus, just doubling that payment. So it makes it very difficult for those changes to take place. And that's what we're seeing. We're seeing less change take place. In fact, I think there was a study done. I don't have it pulled up here. The study done that there's been less change this last year than there has in the last few decades of, relocation and moving just in general across, just moves taking place, whatever that looks like. So, and we're seeing that in the numbers, obviously, in closed sales as a whole, are up very little. We're actually seeing it rise a little bit, but across the country, that's not the case. We're seeing actually nationally, the closed sales are actually less in 2024. which means that we had a historically low 2024, which means we're going to see less, we're on track to see less homes closed as a nation in 2025, which means that the trend is still going where less people are moving, less people are buying homes. But Columbus is not the case. We're seeing a slight modest change. Obviously, we're seeing year to date just 1%. So not anything drastic that's going to really change the national landscape, but we're above the average across the country, which seems to be the case. There's certain pockets of the Midwest and Northeast that are still seeing really strong markets like Columbus, kind of hold its resiliency and home ownership being a huge part of that. And people still have the desire, and buyers still have the desire to have home ownerships. Homes are still selling here in Columbus, unlike some of the southern and states that we're seeing, just a lot of growth take place really fast in those areas, and a lot of home builders take place. Columbus had a little bit, we had a lot of home building going on, but not quite as much as the South and West had over the last 5 to 10 years. And we're seeing that, existing homes are still cheaper than new build homes here in Columbus. So that's why the market here is still very steady, and there's not a huge over influx of new builds and new builders really flooding the market and with their incentives and things like that. So, anyways, one thing I do want to talk about is, I talk about year over year pricing is always the focus of, where's the market going? Is it going up and to the right? Is it appreciating or is it depreciating? Are we seeing, a recession in a sense when it comes to housing where markets, are going backwards, but we're still seeing that positive number year over year, and that's what this is tracking. But this time of year, we always focus on, okay, the market's shifting. It's summer market into fall. We're here late August now, talking about the July numbers, but we're in late August. And we'll show you this chart because I love this chart, and I love that this is the biggest eye opener for a lot of people in the Columbus market, knowing how seasonal the market is. We have peaked when it comes to the Columbus market. The June numbers was the peak of the market. And I like to talk about month over month, statistics as well. And month over month, we saw a $12,000 price decrease from June to July on the average price. And the reason I want to talk about that is because last year we only saw a 7K price drop at this time of year. And so it's almost double where we're seeing, okay, things peaked and we're seeing a little bit more drastic change. Is that going to be consistent? I didn't look into like, how, the month over month, every month in the fall of last year. But we see a pretty drastic line that's going to come down. We're going to see prices soften. We're seeing less buyers in the market right now. And I'm seeing that in the field as a realtor here, that we are seeing just less buyers out there. Times where we would get, 20 showings, we may only be getting five now. And we may, typically have gotten five offers. Now we're only getting one. And that's still the way it is. And in Columbus, we saw this the last 2 years where we saw those peaks hit in the spring, late spring markets. Summer really slowed down and got quiet. And it kind of just trickled into the fall. Now there's, news that rates potentially will drop. So I think this is another factor that's going to weigh on buyers' decisions, whether they wait to start looking at houses or they start, maybe being aggressive now, is that, the rates haven't dropped, but there's news and talk of it dropping. They've softened a little. We saw the year-end low rates happen this last year around 6.5%. There's the year-to-date low rates, but there's always that, hey, they dropped some. There's still talk of it dropping more. Will it continue to drop is the question. And where buyers make the decision to start looking and making offers now, or will they wait until the rates are a little bit lower, and that helps them with the pricing and making it possible for them to actually purchase the house. So we will see. The big thing is inventory is still on the rise. And this is what, kind of teased at the beginning. We saw a huge amount of inventory up. Inventory is up, there's 1,300 more homes available this year than there were last year. It's up 20%. Now, it's still, I actually know how to pull it up. Let me pull this up real quick for you. It's still, um, in line with what what I call the pre-COVID market. So it's going 19 in July. Let's just see where it's at. I haven't even looked at it, but we'll see. We're at 5,000 in July. So, July of 19, we had 5,000 homes available on the market. This month we have just, so we're over that. We're, 600 homes more than we had in the pre-COVID market. And we know the pre-COVID market was really a healthy market, and Columbus was a very, hey, homes that were ready to go, that were nice, were selling really quickly, had multiple offers. You also had to bid, and then homes that needed work took a little longer to sell, which is normal. You negotiated, terms and condition and pricing and all that stuff on those, and they still sold. And that's kind of where we are now. If and it's location based, very much, back to the fundamentals of the location matters. And let's go back here. I want to show you again, kind of onto that point. We're seeing, location really take place, and we're seeing still across the board. You can actually, this is the Columbus board. You can actually go into breaking it down, and I often do this in these videos where you break it down either by county or by, school district or corporation. And this is a really unique thing that Columbus the board does for us. I'm not sure about other area boards, but I've been told that they don't often have this pinpoint of data broken down for people. So this is really nice that you can actually look at the area. And this is where it's going to be really important for you to understand when you're looking to buy or sell your house. What is your area doing? What is your location doing? What is the school district doing? Focusing on that, understanding the local market, not just the Columbus market as a whole. It's good to know, hey, the market in Columbus is steady, it's moving forward. Is it substantial growth? No, but it's still moving forward. And then what is your area doing? You look here, just the very top, Clintonville is up 16%. This is the average price. This is median price. Average. This is the new listings. Or what is that? Yeah, new listings. You see 16% average price is up. So it's still a drastic. That's amazing. It's a crazy number. But even though if you didn't know the area, you just look at the national news, you would think that hey, it's a buyer's market and that you're going to get this, steal in a market right now, or the prices are going down. Not the case there. And same thing with some other areas. Bexley's 8%. You're seeing some areas soften as well. And so, you're seeing some drastic numbers, and this is where you got to be careful of looking at this data just 1 month. This is why it's good to look holistically because, this number matters too. The number of listings or closed sales is what they're getting the data from. And you may have areas that have, like this area has three closed home sales, three sales closed, which means that it could have a small house that two small houses that sold last month and three big houses that sell this month. And those big houses, obviously, average price is going to fluctuate, majorly if you only have that little of data. But you look at the Columbus area, we have enough, data in Columbus, 800 homes, 800 plus homes to look at the Columbus Corp and say, where is the market going? And it is very, very almost, it's 0.2% higher, but the school district's actually 0.2% lower. So it's kind of an interesting way to look at it. It's very, neutral in a sense, where Columbus City is not, there's areas in the Columbus, which you got to think includes, I believe, should include this Clintonville Beachwald area that has 16%. So if you think of that, there's areas in Columbus that are, not as desirable, actually going backwards. There's areas that are still going up. And that's even with that data, it's hard to decipher what pockets are seeing increases, what pockets are seeing decreases. And a lot of it depends on, again, it goes back to supply and demand. We saw supply is up 20%. And this is where this is really important to understand. Is the supply and inventory, really, is there a lot of options in the neighborhood versus not? Where Clintonville looks like they have a little bit more new listings come up. But last month we only had 17, we had, 17% less homes sell. And that's the data they're using. So based on what's sold, is actually selling for higher, much higher, versus what is actually, but we still have options. So it just means that, some of these houses aren't selling, they're sitting, and or we're just seeing an influx this month. So, take it a grain of salt. You want to look at this month over month when you're thinking about an area that you really want to dive into. But with that said, I don't want to drag on this. There's a couple areas I do want to focus on, and those big news that Intel is kind of waffling right now. And if you've been following the Columbus news, and I want to see, that does impact the New Albany area and out there. You're seeing that, make a huge impact in New Albany, where you're seeing those numbers go backwards, or people are pausing or not just paying as much as they would have year over year. Again, there's not a whole lot of houses for sale there. So, again, we can look at that. We can go back and look at, if you're thinking about, hey, I want to know what's going on in New Albany. You want to look at this holistically, month over month, even year over year. You can go back and say, okay, what was July of last year doing in New Albany? You can come here and say, okay, where's New Albany? Okay, it was even worse last year. So okay, we're seeing a trend here. Numbers are coming down, and it's coming down of this year. Is that just a July thing? You can go back and say, okay, you look at these, holistically again, and look at, okay, what happened in April, the peak of the market, was it up or down? Let's see, so now it was up quite a bit in April. So we see that just fluctuation month over month. So that's where I would say, hey, is New Albany's bottom falling out when it comes to the housing market? Not at all. It just means that, certain months they, sell a lot more and certain months they come down. And it depends on what kind of houses are being sold there because there's not a whole lot of data to be available. So that's where you got to just kind of have an agent that's knows the area, understands the concepts of what's going on and where the market's going, and what is taking place. Even these outside voices, and national news will never know and understand a nuance of a community um, until you dive into it on a micro level and really look at it through a microscope here and understand what the market's doing. And then having the ground floor experience as well really matters to understand what's going on. That's why a local agent is so critical in this market right now. Someone that understands what's going on. If you're looking to make a decision whether to buy or to sell, understand what's going on in your neighborhood and your community to understand how to get your goals met and get you either into the house. It may not be, you may not be getting a deal in a market still, but you may get into the house, which is the main goal, or to sell your house for top dollar and for in a quickly and timely manner are typically the things that people want to focus on. So one last thing I do want to focus on because again, demand is up or supply is up, and I want to talk about demand. So I always talk about real estate is it's not rocket science. It's simple economics, supply and demand, and there's obviously a lot of nuance to that. What kind of demand or what kind of supply is out there? What buyers are really wanting? All that jazz, and it helps to understand that. But at the same time, supply and demand is a huge factor, the main focus, and this is going to show us interest rates. And the best way to understand demand is understanding where the best way to track demand is mortgage rate or mortgage applications. Now, this is not the only way to track demand, and it's not a flawed. There's still flaws in it because it doesn't track cash buyers, of course. And as we saw during the COVID era, there was a lot of cash. There was a lot of cash available, and a lot of people taking money and taking loans other ways to create cash. And so we're seeing a lot of that dry up, and we're seeing a lot of what we're seeing a lot of is the crazy, investor cash out there, just throwing offers at everything, creating multiple offer situation right away. As soon as things hit the market, you'd get two or three offers from a investor that was, probably lowballed, but it was still two or three offers. Then and then sellers sellers and listing agents say, hey, we have multiple offers on this, and buyers would rush and frenzy and have to try to beat those offers, and it just created a little bit of a frenzy. We're not seeing that happen quite nearly as much. And they're still out there in Columbus. There's still a lot of buyers out there, but they're still, kind of lowballing things as well. So anyway, this is the interest rates, as you can see here, tracking interest rates. Since interest rates jumped back in the 21, 22 years, you can see that demand obviously fell way down. But this is where we had way too much demand. We actually had, so much demand, we would get 20 offers on a house. Even if you cut that, again, cut that by, 90%, you're still getting multiple offers on a house. So even though demand has gone way down, theoretically, we're still seeing, enough demand in Columbus to keep the market afloat and to keep it moving forward. So, and we've seen it being pretty steady since the rates have been up. And it's actually growing a little bit. I think people here it bottomed out in 23, and it's slowly, steadily growing. And I do believe if rates continue to come down, that we'll see this continue to go up. There's a direct correlation there. And they're talking about softening rates the next year, next 6 months, really. So we will see how impact that has. And there might be a little bit, I say this every year this time of year, there might be an opportunity here in the spring or the fall market to snag a house, before prices jump back up in the spring. And so if you're considering buying a house, you're considering making a move, now may be the time to get prepared with if the right house happens to come on the market, you may be able to, not have as much competition. And you may not buy it for less than you would have last year, but you may get it for more than you would pay for if it was the spring market. So things to consider if you're thinking about buying. Again, it's just important to know your area, understand the market, local market of where you're thinking to be. With that said, I'm always happy to have a conversation with you, whether you're looking to make a move or sell a house or just want to know what your house's value is. I'm always happy to have a real estate conversation with you. I hope you find this video and information useful. I'd be more than happy just to continue the conversation with you. and answer any questions you may have about this confusing market as we see nationally and here locally. So thanks for tuning in, and I will see you next time.